Well, once again, welcome to the show. Well, anyone going in search of a simple, single solution to the housing crisis will soon learn that there is no such thing.
It's a long-term issue, which has been exacerbated by the short-term issues that have happened during the COVID years.
That's Owen Davis, the founder of Leifield Property Group, who believes that we should give credit where it's due and look at the activities of these suggested perpetrators, because they could quite easily be the source of the solution. And then Bushy is joined by Emma Slape. Emma's the director of the Real Estate Institute of South Australia, and Emma reveals that the number of inquiries from buyers to purchase residential property outside the state in which they live has jumped significantly. That's according to research by realestate.com.au. And Emma points out that a fair proportion of the interest is in properties in Adelaide. Before we start, I want to thank our supporters and content partners, realty.com.au, BMT Tax Depreciation, Know How Property Finance, Get Rare Property, and Apiro Marketing. You'll find us on all podcast players as The Property Hub, also on the Southern Cross Soul Stereo Network, Hot Copper, and on all social media platforms.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote. Realty Talk and your host, Bushy Martin.
Now, over the last couple of years, it doesn't seem to matter where you turn, the housing crisis just seems to be the topic of media conversation. And like all complex and dynamic, constantly changing environments, it's common for us to try and simplify the cause down to just a single denominator. So some are blaming migration, others the building industry, and sadly, most target the so-called greedy mum and dad investors who actually provide about 80% of rental accommodations across our great nation, and they become the convenient scapegoat for all of our property yields. Consequently, a host of half-baked, ill-conceived, reactive, band-aid solutions keep getting thrown around to deflect the blame, and we hear anything from rent freezes and caps to limits on Airbnbs. And these cut off your nose to spite your face list of quite short-sighted suggestions just keep coming from politicians and others who clearly don't understand the intricacies of housing and the property industry. But could the wrongly blamed perpetrators of the problem actually be the source of the solution? Well, to get the lowdown on possible tax reforms and incentives to help the housing crisis in both the short term and the long term, from an experienced property professional who's active in the rental trenches and manages properties right across the country, we're joined by Owen Davis, the founder of Leifield Property Group, who specialise in property management across 5 states and 249 suburbs and counting. So welcome back to Realty Talk, Owen.
Thanks again for having me.
Owen, I guess to state the obvious, what are the problems and issues that you're actually seeing in the housing crisis on the ground across the country?
Yes, well, I mean, first of all, it does vary from state to state and from region to region. The number one issue is people just struggling to find a place to live. It's let's just take price out of the factor altogether. It's people need to put a roof over their heads, and and that's simply because there's not enough properties. There's parts, especially in Queensland, that even though we hear this as hearsay, but it's reported to the government that people are living in tents in parks. And families doing this or living out of their cars, and that is homelessness. And we shouldn't have that in this country. There is enough land, there's enough resources, and we shouldn't have people homeless purely because there's not enough properties. So that's a problem. The second main issue is because of that lack of supply, the prices are just skyrocketing. And yeah, I've been in this industry and this business for a long time, and to see what properties are leasing for now, and yeah, it's just like wow. And you know, it's and not that they're not worth it from a market point of view, because the market does set the prices, and the property owner needs to get a return on their investment that is comparable to the level of investment and what the market is willing to pay. But when you look at the incomes that people have got that are applying for these properties, yeah, in some cases there is a huge disconnect.
Yeah, very well said. So that, and I don't want to labour on this too much, but the scarcity that you talked about, what's your read on the causes of that over time?
I mean, there's several short-term causes. Yeah, and we all know about the issues that happened during the COVID years with supply chain issues and delays in getting new developments approved and so on, and bank lending and the inflation issue that's pushed up pricing of all of the building materials. I mean, we could go on and on about that, but you know, let's assume we all know about those issues. We've all heard it. But even before COVID, we already had an undersupply issue.
Yeah. Yes.
And
yes.
A lot of that is still stemming from government on all levels holding up the process of approvals. And also all of the government taxes that are involved with on all levels of government that takes advantage of developments and new builds happening. So it's a long-term issue which has been exacerbated by the short-term issues that have happened during the COVID years.
Yeah, very well said. Yeah, go on.
Thank you. So to move on from there, there's a lot of things that, yes, in your opening you talked about the Band-Aid solutions that the governments have been trying to put on, and we do have a short-term crisis that we need to fix in the short term, but we need to look at long-term solutions to this as well.
Absolutely well said. Well, why don't we jump straight into those? Because I guess, you know, you mentioned to me pre-talking today about some potential tax reforms and incentives that you think need to be considered to actually help the crisis, both short and long term. Can you expand on those for us?
Yeah, sure. Let's look at the short term. I just talked about all levels of government having their hand in the kitty with new developments, and when we've already got pricing pressure, inflation pressure pushing up the cost of materials for building, taking away the red tape issue of getting these properties approved for building, let's make it cheaper to be able to actually build them. And the one thing that government has the ability to control is the level of taxes that they put on these things. And that could actually help the inflation issue as well. Yeah, they're handing out $300, putting it on everyone's electricity bill. That's great for a short-term issue, but people need to live somewhere. Why can't we reduce the cost of housing? Everyone's saying that housing is costing so much. We can reduce that cost of housing. We were happy to spend $100 billion or however much it was during COVID years to lock people in their houses and pay them money to not work. How about we spend that same amount of money to be able to provide them with the opportunity to buy a house for themselves or to have a house to even rent instead of letting them live in tents in parks? That's that's the first issue that they could do. Let's take away all of the and to maybe help pay for that, let's take away the demand incentives. So, yeah, there's a lot of incentives, both federally and state governments, that push up the levels of demand. So we need to help increase the supply issue and reduce demand. So let's take away those stamp duty concessions. Let's take away those cash handouts, and let's make properties cheaper by reducing those taxes. So that's my short-term ideas of some solutions that governments could do.
Love that. What about the long term?
Yeah, long term. I mean, this is a bigger picture, which some people don't like my ideas around this, but stamp duty and land tax reform. It's been talked about to death by state governments, but no one has had the gumption and the guts to actually do it. The previous New South Wales state government started trialling for first home buyers that were over and above the stamp duty concessions for zero stamp duty, to be able to start paying a land tax instead of a stamp duty.
Yeah.
So that they could spread that cost out, because we've got a lot of young people with high incomes, but next to no savings. Yeah. So, being able to put that money into a deposit on a property, that cash, but they've got the income to be able to support an ongoing tax. Yeah, that's fair. Yeah. But then you've got the disincentive on the other side for people who have owned a property for many decades, and they've been living there, and the pension system, if they've retired, has a disincentive for them to not sell and downsize, because if they release cash to be able to invest for their own income, then they might lose their pension. And because their principal place of residence, which might be a nice, big, huge house that's worth millions and millions of dollars, but they don't have the income to support and upkeep, the upkeep of this property. So we've got a disjointed market from that point of view. And so some reform so I'm not saying that we necessarily have to charge a land tax on owner-occupied, but that is one option. It can be tiered, it can be altered, doesn't have to be across the board, but reducing that barrier to entry to get into a property, but it's also a barrier of selling a property to downsize.
Yes. Yeah, very good point. And I think minimising that hurdle, it is an accessibility hurdle, not an affordability hurdle, as you say, because it's just that savings gap that people need to jump over. I think really needs some long-term national foresight at the federal level to actually underpin the state governments, because sadly the state governments rely very heavily on that stamp duty to fund their programs. So just as you said, just as the federal government was very quick to call a national cabinet to address the health crisis, why they're not doing the same sort of exercise in relation to the housing crisis really makes me scratch my head, particularly when you read reports of $40 million being spent just to on an advertising campaign to tell us about the $300 they're going to put in our electricity account. You would think that sort of coin could be much better directed towards these sort of long-term thoughts that are going to ultimately benefit all of us. As a result of that. So look, again, only just scratch the surface. Owen, we'll definitely get you back to dive into this and other subjects moving forward. But I just want to thank you for these sustainable solutions to the housing crisis in front of us, based on your very hands-on industry expertise. And thanks for your generous time on the Property Hub today.
Thanks for having me, and be glad to come back anytime.
Excellent.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
This is Realty Talk, powered by realty.com.au.
Now, the share of inquiries from buyers to purchase residential property in the state has jumped significantly in recent times. Just under a quarter of all inquiries to purchase property on realestate.com.au across the country coming from buyers based in a different state to the one that they were looking to buy in over the last 12 months. And that's a jump of 35% on the year prior. And my good old hometown of Adelaide in South Australia has been the most popular state with interstate buyers over the last year, accounting for just under 30% of the state's inquiries, which is nearly 1 in 3. So why is this? What's changed and what's driving this growth trend in borderless versus backyard property buying? Well, to reveal what's really happening in relation to interstate interests and the impacts, if any, that it's having, we're joined by the Emma Slape, the 2-decade property veteran who spent 10 years as a general manager of the Real Estate Institute of South Australia, where she now continues on the recent board of directors, alongside her very demanding role as a CEO of Turner Real Estate, which is South Australia's largest property management agency. So welcome back to Realty Talk, Emma.
Thanks so much.
Now, Emma, interesting exercise, and there has been a bit of a change in appetite in this regard. So what's your local take on the changes to the level of interstate interest by buyers and buyers agents in recent times?
I've definitely seen a real uptake in that, probably in the last 3 to 4 years, I'd say. We're probably starting to see a little bit of it leading into COVID, and often it's driven by someone who might have grown up here, still got family here, know Adelaide. Certainly for a lot of property investors, knowing the area is important to them. And they just can't afford, particularly Sydney or somewhere like that. So they say, look, one day I might come back to Adelaide, or I love the security of Adelaide. I know that it's a really dependable market, and so they're turning to it there. We're also seeing, now that property prices have increased so much in Adelaide, and we're still seeing a very tight rental market, that investors with a budget will come along and say, I'd love to buy 2 properties in Adelaide. I really think that's going to be a better investment for me, both capital-wise as well as yield-wise, rather than buying in Sydney or Melbourne. And I think the Melbourne market definitely has people a little more spooked at the moment. So they're definitely turning to Adelaide, and dare I say Perth as well, because that demand is there, the economy is fairly strong, and long-term projections show that we are going to have strong demand for rental properties for quite some time, with both net migration and also a lot of industries investing a lot of infrastructure in and around Adelaide.
Well said. That sort of relative affordability piece is certainly a strong one. But digging into the details a bit, what sort of property types, locations and price points are interstate buyers and their advocates focusing on?
Yeah, we're definitely seeing a lot of people sort of come around and say, what could I buy for 500,000 to 600,000? And that's probably just the cusp of where we would recommend investing. If we have the capacity with the investor to look at something around the 700,000, we're starting to look at more of a family home in the outer suburbs. So we might be 20 kilometres out of the CBD, but we'd be looking at a probably 3-bedroom home, perhaps built in about the 1970s. It's going to be in a decent area with strong home occupiers around the area, schools, facilities, all those types of things. So it's going to be a well-performing rental long term. If the budget is 500,000 to 600,000, absolutely, we can still make that work. But we might be looking at something on a smaller parcel of land. We might be a little closer to the city. We're not going to get as much capital growth, but certainly there's still a lot of good quality units or small houses that we could get perhaps within 10 to 15 kilometres of the city in that price bracket as well. So again, it depends how long people are looking to hold and whether yield in the short term is more important or whether they want to see that capital growth longer term being the number one priority.
Awesome. Now, I'd love your thoughts on what impact, if any, is the increased level of interstate interest having on local property conditions, and if so, where and what type, I guess.
Yeah, what we're starting to see often with interstate investors is they are really keen to get into the market at a certain price point. They're very unemotional about their buying. So often they might be in the hunt for a property, but they might not be the successful purchaser every time. So turning to the sales side and what we see in that type of business, we'll see those offers, but it tends to be where they're really keen to secure something sooner rather than later. End of financial year sometimes has a bit of bearing there if they're looking to reduce their tax, but not just interstate investors, a lot of investors full stop in our circle at the moment, sort of waiting for prices to abate a little bit, waiting for bargains. I'm not sure if they're going to happen, but they seem to be investment ready. So what that tells us is now and in the next sort of 12 to 18 months, we will see those people into the market one way or another. So some are looking for more of development sites longer term, those larger blocks of land that were perhaps built in the 60s and 70s, particularly in those sort of outer areas, looking to perhaps subdivide them into 2 or 3 properties. So we've also got that dynamic of an investor in certain pockets of the market too, particularly when you're talking about relatively flat land that makes it an easy subdivision project.
Yeah, absolutely. Now, I guess given that you're on the ground and know the local conditions intimately, what's your guidance and advice for interstate interests that are relying primarily pretty heavily on desktop data and other people's opinions and looking to secure properties that are sight unseen in South Australia? What's your thoughts on that one?
I think understanding the demographic of the area is really important. Some of the properties that may fall below the sort of 500,000-600,000 may be an area that attracts a different tenant demographic than would be ideal. Perhaps a much higher concentration of tenants in the area rather than owner occupiers, and that will have an impact long term on capital investment. You may also find a little more troublesome tenancy. So we would definitely say get to know what's going on in the area, talk to agents about where they see the pockets of different suburbs. And school zones are becoming more and more important. There's a couple of key schools in Adelaide, as there would be in every state, and sort of come April, May, when the schools are asking for those leases and 2 years in advance, we find those properties very hotly in demand. So if you own one of those, there's a price premium attached to that, which these days could be between $50 and $70 a week, which of course adds up over the longer term. So getting to know those subtleties is really important to make sure that you're absolutely maximising your investment and return on what is a pretty big commitment long term with property.
Look, really love your insights, Emma. We've only really just scratched the surface on this and other great local topics, but I want to thank you for these very valuable and thought-provoking insights, and thanks again, as always, for taking the time to join us here on the Southern Cross Austereo's National Property Hub platform. Thanks, Emma.
No worries, my pleasure.
Are you curious about harnessing your super for property investment? Propel your future with the enlightening online seminar, The Ultimate Masterclass to Self-Managed Super Fund Property Mastery. Reserve your spot now at getrare.com.au/SMSF. Spearheaded by Rusty from independent buyers agency Get Rare Properties, this masterclass unravels strategic property investment using your self-managed superannuation fund. You know, it's not just about learning. It's about transforming your financial future through education. So embrace this opportunity to enrich your investing acumen. Enroll now in the free masterclass and begin a journey that marries insight with action, leading to a financially empowered tomorrow.
Unlock bonus content now as a premium subscriber.
Join us for more property news each week with Realty Talk and get invested. You can do that by subscribing to The Property Hub on all podcast players. Don't forget too to join the conversation on Facebook. Just search The Property Hub Collective and give us a like and make sure you follow us. Thanks to our supporters and content partners, realty.com.au, BMT Tax Depreciation, Know How Property Finance, Get Rare Property and Apiro Marketing. Until next week, all the best.